Right. Okay. So let me introduce myself. Hello, and I would like to thank you for having us, Franchise Tax Board, to this gathering. My name is Simon Puramo, and today we also have Sonia Karamaza here with us as our subject matter expert to answer your questions. If you do have questions, please hold them until the end of our presentation, and then we will answer them in our Q&A session. We also have Chanel Yates. She's also our subject matter expert. And we also have Isaac Pugh. And all of us, we are together and with the education and outreach team. Now let's get started. Let me share my screen. And let me know if you can see my screen.
Yes.
Okay, perfect. Okay, let me move my... All right. Okay, so let's get started. And here are the topics that we are going to cover today. We will talk about withholding requirements, some common mistakes, your withholding responsibilities, installment sales, trust, foreign sellers, LLC, and other resources. And lastly, we will answer your questions in the Q&A session. Now, generally, withholding is required on the sale or transfer of California real property, unless an exemption applies in Part 3 or 4 on the Form 593. So please remind the sellers that they are not being double taxed. The money withheld during the escrow will be available to be claimed on their tax return and offset their tax liabilities and potentially result in a refund. And there are 3 scenarios in which withholding is not required, which means no forms are required at all. These automatic exemptions are if the total sales price is 100,000 or less, if the seller is a bank acting as a fiduciary for a trust, or if the property is being foreclosed. Now, let's talk about some common mistakes. And during the Form 593 process, there are a handful of common mistakes that we have encountered. So the first common mistakes is the old version of the form is being submitted. Let me show you my form example here. So if you can see this one, this is 2024 Form 593 Real Estate Withholding Statement. Now, we have seen some people have crossed, for example, they took tax year 2021 form and they crossed this 2021 and changed it with 2024. And then they submit it to Franchise Tax Board. However, our system is reading the scanner code at the bottom of the page. So if you can see here, this is our scanner ID. So even though you cross the tax year and change it with 2024, our system will still read the form as 2021. Therefore, the credit will be applied to the incorrect tax year. And if you download the current version of the form 2024, don't worry about this 2023. This is just the time when we update the form, which is the last time is 2023. Another thing that we have seen is images from our form from various presentation has been taken and then enlarged and then printed and then submitted to Franchise Tax Board. So these unofficial copies of Form 593 will cause a processing delay. So please do not use any form or do not copy or use any form that are not directly downloaded from our website. And be sure that you download the most current form and please do not alter the form in any way. So another common error that we have seen is the form is being incorrectly filled out. Let me show you my form. So I'm still in the first page here. So for example, in part 2 here, this is the seller information. And we have seen that the seller input the trust name combined with the social security number, whereas the FEIN should be included. And we are also seeing that the check that has been sent without a payment voucher, which is the form 593V, which can delay the processing of the check. Another common error that we have seen is the amended box is being checked incorrectly. So in here, if you see right below the text here, this is the amended box and should only be checked if the remitter is making correction to the initial form 593 that has been submitted to Franchise Tax Board. Also, boxes are being checked that contradict to each other. So let me show you, this is part 3 and part 4. So for example, box number 1 is selected to certify that the property being sold is the seller's principal residence. However, box number 12 also selected to certify that no exemptions apply. So those two boxes are contradict to each other. And we are also receiving duplicate copies of the same Form 593. Please make sure that you are only submitting one Form 593 and please do not send another duplicate copy. And let's take a look at a few more. So I will refer to the side 3 of the form. So this is the side 3 of the form. So we are seeing that this part 7, which is supposed to be completed by the escrow company, has been skipped entirely, and or sometimes line 37 here is being left blank, which is this is the amount supposed to be withheld from the seller. Now this is going to delay the processing. So again, be sure that you are checking this form over and ensuring everything is complete and accurate before you submit it to Franchise Tax Board. And lastly, the perjury statement here is not being completed and the form is not being signed. So regardless whether the seller meets an exemption or partial exemption on part 3 or part 4 of the form 593, seller signature is required and the perjury statement must be completed. And if you see here the buyer signature, this one is only required for installment sale transaction. And lastly, the remitter contact info should be included in this last line of the form in case we need to contact you. Now, let's talk about your responsibility. As a remitter, you are responsible for withholding notification, FTB Form 593 verification, withhold and remit withholding, and retain withholding forms. Now, let's take a look at these 4 key items more closely. As the remitter, your first responsibility is withholding notifications. Remitters are required to provide buyer with the written notification of withholding requirements, and then provide a copy of Form 593 to complete, and you can download the most current version from our website here. Your second responsibility is to validate withholding exemptions. Verify exemption certification on Part 3 of Form 593 to the extent of your knowledge. So what do we mean by the extent of your knowledge? For example, the seller completes Part 3 and certifies that the house was their principal residence. However, you know that the house was their vacation home. Given your knowledge of this fact, you should withhold regardless. Now, if you do not have the knowledge of these facts, then you must verify that the Form 593 is completed, signed, and received prior to the close of the escrow. But what if the seller doesn't qualify for any exemption? Then this is your third responsibilities is to withhold and remit withholding. This means you will need to submit a Form 593, 593V and determine the amount of withholding to submit to Franchise Tax Board. The amount sent in must be 3 and 1/3% of the total sales price. Now, to use the alternative method, please remember Part 6 computation must be completed. And it also must be completed even when the seller is claiming a loss or zero gain. Show you Part 2 computation, Part 6 computation in page 2. Now, if the seller doesn't complete this Part 6, then you must use the total sales price method. Now, if the seller asks you how to fill out this Part 6 computation correctly, now we understand that you are not authorized to provide legal or accounting advice. Therefore, we do recommend you to explain that they can seek tax advice from tax professional. However, you should verify some figures are filled in. Some key lines that you should look for are line 13. This is the selling price. Line 18, this is the depreciation if applicable. Line 28, which is this is the estimate gain or loss or even zero gain. And the last one, line 29, on top of part 3, which is this is the amount should be withheld. Now let's take a look at the due date. Now the withholding payment, the Form 593 and 593V, which is the voucher, are due by the 20th day of the month following the close of escrow. For example, let's say you close an escrow on March 10th, or let's say you close an escrow on March 27th. The due date will be on April the 20th. Now, I want to add, please remember to input the closing date in line 32, part 7. Let me show you here. Line 32, part 7, page 3. So, because if you leave this line 32, which is this is the closing date, if you leave this one blank, the system will automatically revert back to January 1st of the tax year. Now, I will give you an example. Let's say you close an escrow on March 12th, 2024, and you submit this Form 593 on April 20th, 2024. That is considered on time. However, since you leave this line 32 blank, the system will put January 1st, 2024, and you can be liable to a penalty. Now, this is your last responsibilities, which is to retain the withholding forms. Retain a copy of Form 593 for 5 years following the closing date of transaction. And this Form 593 must be made available to FTB upon request. Let's move on to the liability and penalty. If you fail to withhold, you can be liable with a penalty either $500 or 10% of the amount you should have withheld, whichever is greater. Now, information return penalty, this can occur if you are late filing the Form 593, Form 593 fee, or the payment, which is $50 between 1 to 30 days late, 110 between 30 days to 6 months late, and 270 for beyond 6 months late. Payee statement penalty, this can occur if you forgot to provide copy of the Form 593 for the seller, and it is up to 270 for each Form 593. And intentional disregard, this can be imposed if the remitter intentionally did not withhold when closing the escrow, which is whichever greater between 550 or 10% of the amount to be withheld. The next one, we will talk about the installment sale. or seller carryback. So installment sale is a sale of real property where at least one payment is made after the tax year of the sale. The first installment payment is the down payment during the escrow, and withholding is required on the principal portion of its installment payment. Now let's take a look at who's responsible for what during and after the escrow. Now the first one, withholding during the escrow. Escrow company is responsible for withholding on each principal portion of the down or initial payment. Verify Form 593 is complete and accurate. Submit the copy of promissory note, Form 593, 593V, and withholding payment to FTB by the 20th day of month following the close of escrow. Now, withholding after the escrow, the buyer is responsible for withholding on all installment payments after the close of escrow. Complete, sign, and submit Form 593, 593V, and withholding payment to FTB by the due date. The buyer must provide a copy of the Form 593 to the seller of each installment payment. And the buyer must also notify FTB if within 60 days if there's any change in installment terms or payment schedule. Now, what if your client asks you if you can withhold on the entire sales price during the escrow? So if they ask you about this one, then the answer is no. Something that is always being brought up is the seller or buyer requested the remitter to withhold on the sales price beginning of the installment sale. And if this happens, please explain that you cannot do that because the law states that withholding must be done on each principal payment. That is why you should only withhold on the down payment that is being made during the escrow. But what if the seller wants to elect out on withholding on subsequent payment? Then the seller must file a California income tax return and report the entire gain in the year of the sale. And then the seller must call or submit a written request to Franchise Tax Board to release the buyer from the withholding. And if approved, then the seller will receive an approval letter from Franchise Tax Board normally within 30 days. And this is our installment sales brochure. Make sure that you can you download from the most current version from our website. Let me show you how to download this one. So I will show you, this is the our website, www.ftb.ca.gov. So if you're here, click forms on top of the page here. And then you can scroll down a little bit until you see search online. Click on this one. And in here, you will see all of the forms that you can download. For example, I will take 2024. And then in here, you can type in real estate withholding. And there, you will be presented with all of the resources that we have. Now, for example, let's say I want to download the Form 593, tax year 2024. If I click this one, it will show the form directly to your screen. Now, either you can type in all of the information here, your remitter information, for example, or you want to save it. It depends on your browser. For example, I'm using Microsoft Edge. The save button will be here. So I just click save and I can save it into my download directory. And what about the brochure? So let's say, for example, you want to download the installment sales brochure 4010. So if you click here, it will pop up this questionnaire. So just put in your email. And when you click submit, it will directly send the soft copy of the brochure directly to your email. All right. Now let's move on to type of trust. There are two types of trust that we will cover today. The first one, let's take a look at the grantor trust. It is a trust whose assets and income are considered controlled by the grantor, and it uses grantor's taxpayer ID number, generally the social security number. And when we have a grantor trust on title, or you might know it as revocable trust or living trust, then the seller must complete the Form 593 and use the individual name, which is the grantor's name, and the social security number. This is because the grantor is the one who will be reporting the sale and claiming withholding on their income tax return. Now, we care about this one because for us to apply the withholding correctly, the individual name and the SSN must be matched between the Form 593 and their income tax return. So please remind the seller not to include the trust name. And the second type of trust is the non-grantor trust. It is a trust that is a separate entity from the grantor and is viewed as a taxable entity. When completing the Form 593 with non-grantor trust on title, complete all withholding forms using the trust name and the IT number, which is generally the FEIN, and do not include the trustee or beneficiary's name or the SSN. For additional information of trust, we have a trust brochure. It will give you an overview about how to identify the type of a trust, determine if withholding is required, complete the withholding forms, distribute withholding following a grantor's death. Another common question that we got asked frequently is if there's any special treatment for foreign seller. The answer is no. Foreign sellers follow the same rules as domestic seller for California real estate withholding. For a foreign seller who doesn't have a social security number or IT number, cannot meet an exemption in Part 3 on the Form 593. It doesn't matter if the seller has lived in the property for the last 20 plus years, but without an IT or SSN, the seller cannot meet an exemption in Part 3 and withholding is required. The seller should obtain the IT number from the IRS prior to the close of the escrow. If they're unable to get the IT on time, it is okay for the remitter to submit the Form 593 without the 19 or SSN. And it is seller's responsibility to eventually obtain an ITIN and call FTB so we can apply the credit to their new IT number. However, please make sure when you have a foreign seller, ask them to add their address in Part 2, seller information. And it doesn't matter if it's a foreign address. So let's say they sold their house in California and then they said, oh, the only address I have is outside of United States. Then tell them to put it in the Part 2 of the Form 593. Now, let's move on. This is the foreign sellers brochure. You can download this from our website as well, and it will be helpful for you and your client. And let's move on to the LLC. For corporation, partnerships, and LLC who are registered to do business in California with Secretary of State, requires no withholding at all if certifying to an exemption on the Form 593 Part 3. However, it's going to be a different story with SMLLC or single members LLC. For single member LLC, you must withhold unless the single member LLC qualifies for an exemption on Part 3 on the Form 593. Because based on the IRS, if an SMLLC is not elected to be treated as a corporation, then it will be treated as a sole proprietorship. That means it will follow the same rules as individual seller. And this is the most current brochure that we created. The purpose of this brochure is to break down the responsibility of the remitter, the seller, and buyer for each type of sales transaction. And you can also download this from our website. Let me show you what's inside of this brochure. So this is the outside of the brochure, and this is the inside of our brochure. By column, you will see the type of transaction here. And by rows, you can see what entity or who's the entity responsible for which part of the form. Okay. And here are additional resources that can be helpful to you and your customers as well. They're available on our website for you to request or to download. And before we enter the Q&A session, we have a subscription service. Now I want to show you how to subscribe in our newsletter. So let's say you go to our website, ftb.ca.gov here. Just click on search on the top right-hand corner and type in subscription services and enter. And choose the first option, subscription services. And click, enter your email address. And click change subscription. Oh, the internet is taking a little bit longer. Okay, so here you will see a lot of newsletter from Franchise Tax Board, but for the real estate withholding, just go down to the bottom, check these three boxes, and click Save Change. You will see a confirmation sent to your email, and you must follow the instruction. So with this subscription service, if we have an update on our forms, if we have an update in our brochure, so we will send you the newsletter. Or also if there's an update in our video, yes, you're right. We have a YouTube video channel for real estate withholding. So make sure you subscribe into our subscription service. And if you do have a question in the future, you may call us in this phone number. This is specific for real estate withholding. It's 916-845-4900, or the toll-free number is 888-792-4900. Okay, thank you. And now let's continue with the Q&A session. Sonia, if you want to take it from here.
Thank you, Simon. Hi, everybody. I'm Sonia Karamaza, and I'm here to go ahead and take your questions. I believe you guys are all in person on your end. So if someone can come up to the computer or the microphone and ask the questions, I'd be happy to answer those for you.
Oh, okay. Does anybody have questions? Questions, anybody? Okay. If there's multiple. Okay, I'm gonna have you come here. This is where the speaker is. Okay, there's someone that has. For me. Oh, for me, I don't know anything about this. I do though. Okay, here's your first question.
Hi, if there's multiple sellers, is each individual required to fill one out, and do they put a certain percentage, or how does that work?
So correct, unless they're spouses, right? Because there's 2 spots for spouses on the 593 form, you can go ahead and put them on one form. If there's multiple sellers because there's different partners, yes, each different seller. Simon, can you please bring up the form? Or I have it up too, if you're not able to. Let me see if I can share it. Okay, so if you go ahead and go to the first page, flip for me, please. There's a spot for ownership percentage. You see that right there. So say Simon, Chanel, and I all own equal parts of a property. We're each going to have our own separate 593 form, and we're each going to identify our ownership percentage on that bottom right-hand corner of the part 2 of the form.
Good question. Another question? Come on up. The price is right.
I don't. I just want to clarify. So on part 2, where it has you fill in the address, if the property address is exactly the same as theirs, you still have to put that address in again, or just
Yes,
leave it
please.
blank?
Yeah, we definitely need it twice because we need to know exactly what's being sold. We also would like that parcel number and the county for the property that's actually being sold.
Okay, got it. And then on the last page, the perjury statement,
Mhm.
what if they don't fill that out? Does that have to be filled out every time?
Ideally, yes. If something applies to them, they should be checking that off. So the purpose of that is the first one being the sale is fully exempt from withholding, right? Even if they
Yeah.
have a full exemption in part 3, we would like that checked and we want that signature from the seller because the form needs to be sent in to us regardless if there's an exemption met or not. Same goes for line 2 if they selected something in part 4. Line 3 specifically. So I don't know if you guys remember our old form. If the seller is choosing to do that alternative withholding calculation, they're choosing to do withholding on their gain instead of just the total sales price. They need to elect to do so. And so that's what, by selecting that box and signing that form, that's them authorizing that they want you to do that alternative withholding. And then box 4 being the buyer transferee section, that's when it's an installment sale, or if you guys call it a seller carryback, that's the buyer agreeing to the terms, the buyer transferee acknowledge that they're going to go ahead and withhold. They are understanding the requirements outside of escrow that they're required to withhold on each principal payment and sending that into FTB and providing the copy to the seller. And then the last one, I don't know if it applies to you guys. I don't know if you have any exchange accommodators in attendance today, but that's specific to if the QI is acknowledging that it's a cash poor transaction. Again, the cash poor transaction only applies to QIs in this instance. So we would need to know that. And that's why it's really important. If any of these apply to them, yes, something needs to be selected because they are agreeing to those terms and they're agreeing to that information being correct and accurate.
Okay, just again, I'm sorry guys.
No,
One more
no, go ahead and
clarification.
ask.
What is the alternative withholding calculation? Is that on page 2?
No,
And
so
number
if
2?
Simon scroll up. Okay, so you see line 36. Line 36, there's the withholding calculation. It's regular 3 1/3%. Okay, that's just the standard withholding. The alternative withholding calculation, this came back into effect, I believe, in the early 2000s, is that the seller could elect to do an alternative. That means that they are, instead of having withholding done on the total sales price of the property being sold, they are choosing to determine what their gain is. So what are they actually making off of the sale? And the withholding is strictly done on the gain. And so depending on what kind of entity that seller is, the withholding percentage varies. So as you can see, an individual would be 12.3% of the gain, while a corporation is 8.84% or an S corp is 13.8%. And that's when Simon kind of went over page 2. So the seller or their CPA determines what their gain is here. So they need to actually fill this out in order to determine what their gain is. This part is also completed if the seller is claiming a loss and that they're stating they have a loss. In order to be exempt from it, they need to actually complete this portion of the form so we can see some figures to determine, yes, in fact, you are having a loss. So it's twofold. The computation is both to determine your loss and or the gain to do the alternative withholding calculation.
But at that level, it's a CPA.
Correct. We're not expecting you guys to, go over, but we do ask that something be filled in there, right? In order for you to accept that, I'm having a loss, something needs to be determined here, as well as if they're doing the alternative one, well, it rolls over onto the next side. And in order for you to know what you're actually withholding on, they need to complete that part, or else you wouldn't really know what their gain is in order to determine how much withholding you're going to submit to FTB.
Can you ask just the question is what is our responsibility as the agents representing our client?
They won't know that. I can tell you just out of an escrow owner, you don't have that responsibility.
No.
This is knowledge. The responsibility is from the seller, and if it gets that complicated, it's from the CPA. But this is just knowledge for you to have, even for your own personal reasons.
Correct.
Okay.
Another question.
For
Yes.
liability.
Yeah.
Okay, if you're doing 1099, do you have to fill out this form?
If you're doing 1099, would you have to fill out this form? I don't.
Yes.
Well, this form is completed for any sale, right? Unless it's an automatic exemption. There are only 3 scenarios when we don't need this. If it's $100,000 or less, this form does not need to be completed. If it's the bank is a trust acting as a fiduciary for a trust, withholding doesn't need to be completed. And then what's the third, Simon? I'm sorry if you can get to that. If the property is being foreclosed. Okay, those are the only instances that this form doesn't need to be completed. So I'm assuming if it's outside of this scope, yes, this form needs to be completed. And I would assume anytime there's a sale transaction, a 1099 needs to be completed as well, right?
So, I have a question. A short sale would be under the foreclosed section?
If it's.
I don't believe a short sale and foreclosure are the same things.
They're not, but they're on a negative, and they're doing short sale, right?
So then they would need to prove that they have a loss, right?
Oh.
If they're actually having a loss, they need to check box, 3, indicate on the form 593, indicating that they're having a loss, and then they need to prove their loss on the computation. If they're selecting part 3, we don't require you. It's not your obligation to sit there and look at the figures that they're putting in the computation, but we do ask that you do your due diligence and you're making sure that it's not completely left blank, like something needs to be completed in order for you to not withhold.
Any more questions?
Yes, I do have a question, number 2.
Yes.
Number 2, the one that says that the seller has used the property. See, the first one qualifies as a private residence. We know that. But the second part, I assume that on the second part is because they already moved to another property.
No, let me explain the difference.
Perfect.
So the first is it references IRC section 121. Okay, so previously, before, again, back in the early 2000s, we went and added number 2. But previously is you had to live in the property 2 out of the last 5 years. If you're looking into the actual Internal Revenue Code section 121, it's 2 out of the last 5. We went ahead and added line 2, which is it's without regard to the 2-year time period. So it doesn't matter if I've lived in the property for only 6 months. If it's my current principal residence at the time of sale, I can go ahead and meet an exemption. So number 1 being, it doesn't have to be consecutive. Say I lived in it in 2019. And then I moved out of the property, but then I moved back into it and I lived in it for a year. It was my primary residence back in 2022, and then I moved back. You can go back and forth. It's without regard. As long as it was your principal residence for 2 out of the last 5 years, you can go ahead and meet that exemption. Line 2 is specific to it's your current principal residence at the time of sale. So in theory, line 1 and line 2 can be true at the same time. Those things can be true if it's a current principal residence and you've lived in it for 5 years. Sorry, is that clear?
One more question.
So number 2 is actually if it's a trust, am I correct?
No, it has nothing to do. It's the seller or the decedent if being sold by the decedent's estate or trust. It can be an individual. It doesn't. It's applying to both. If it's my current principal residence at the time of sale, I can meet an exemption, but it doesn't matter how long it's been my principal residence. It could be my principal residence for the last 9 months, and that's okay. Line 1 is specifically saying it has to be your principal residence 2 out of the last 5 years. Now, it doesn't state that in line 1, but it references IRC code section 121. And if you actually looked up the code, it explains that it has to be 2 out of the last 5 years.
And then their CPA or their tax professional will know if they have any questions about that, they can ask their CPA or their tax professional about that.
One more question?
What if the person's parents had passed away and then they took it over?
What if the person's parents passed away and then they took it over?
Is it in a trust or in an estate?
Is it?
No.
No trust, no estate.
So it says if the decedent if being sold by the decedent's estate or trust. If it's not an estate or trust, I don't really, that's a little murky.
Okay, so are you saying they moved into the property and took it over, or they are just like renting it out or something like that?
The parents just passed away, they have their own home. So-
Okay, so then they don't, unless there's an estate or trust, they won't, qualify for an exemption.
There has to be instructions, basically.
Mm-hmm. And again, we're not asking you guys to police it, but they need to speak to their CPA, because what's going to happen is ultimately what this form does is it gives the seller credit for their sale, right? The withholding is tax withheld up front, which is going to give them the withholding credit when they file their California income tax return. They'll get the credit for that tax withheld, right? So if the person is not going to file, if the person is not going to report the sale on their return, then they shouldn't be involved in the withholding, right? It's going to be whoever's on title, whoever's going to report the sale, whether it's a business or individual, estate, or trust. Does that make sense? It all flows to the income tax return.
So this form is very important. And so I guess what they're asking you is accountability to that seller and to make sure it's filled out correctly, because that's a lot of money.
Yes, absolutely. And what happens sometimes is, as Simon mentioned before, there's missing information, which makes it difficult for us to apply that withholding, that tax withheld to their account. So when they file their return and they claim this withholding on their tax return, the credit is not there for them. And then they call us and they say, or their CPA calls us and they say, well, we reported this and we weren't allowed this credit. And Escrow did send the money. Escrow did complete the form, but the information, or not complete the form, but they sent the form, but it's incomplete or incorrect. And then that causes a big problem. So that's why we're adamant about making sure that the form is complete and correct.
And one last question.
Okay, so what if they fill out the form and it's number one, they're exempt, and then they go down to the perjury statement and they're fully exempt. And then they sit with and they send that in. Then they sit with their CPA and the CPA said, nope, you weren't fully exempt. You actually owed this. Can they just do an amended one?
So this needs to be done prior to the close of escrow. It's on them to get this into you timely. If you close because you were given a 593 form stating there was an exemption, you as a remitter are not required to withhold. If they give it to you prior to escrow closing, yes, you can definitely just correct it and make it just update it and send us that copy. But if you've already sent it and it's already closed, unfortunately, they are the ones that completed the form. They are the ones that signed it under penalty of perjury, stating that that information was correct and accurate. You are not required to go back and withhold because you've already released the funds. It's a lot of trouble for you to go back and get that money back just to send it to us. So what's going to happen is when they file their taxes the following year, they're going to report that income, and then potentially if they there isn't going to be any withholding because they gave you that 593 form stating that there was an exemption. So at that point, they will have to pay taxes if, there's a tax liability. Maybe there isn't, but you can only do with what the information you're given. It's not your job to sit there and look it over and say, you're not really exempt. I mean, if you did know and you know that they're lying, that's again, we ask you to do your due diligence. But if you're receiving that form, we can't prove what you know. So it's on them to ensure that they are completing the form correctly and accurately.
So the question was that if by mistake they say they're exempt and they
No,
sign.
I understand. It's
Right,
even if it's a
so-
mistake. No, you can't amend anything. We're not asking you to amend it. They made the
there will be a
mistake and it
penalty?
already closed. Not on you, potentially on them, because they are
Right.
signing the form, not you, because they gave you the form. They signed the form. They said to you, I am exempt. I signed it. So we're not going to go and assess a penalty to escrow in that situation. They potentially, if there was an audit and we found out that their information was incorrect, we would, they would be responsible for that, but not escrow.
So it's very important to go to their CPA is what I'm.
Exactly. Yes.
Yeah.
Another
What?
question. So is this form given during escrow?
Yes.
Yes.
Yes. We do
By
that.
the escrow officer?
That's correct. Question.
I mean, ultimately, it's the responsibility of the client, but let's face it. I don't have to say, we end up doing that. One more, this,
For the alternative, method, can seller be liable for more than the 4.3%?
did you hear that?
No, I couldn't. I didn't get the
Oh.
last part.
For the alternative method, would the seller be liable for
Can the
the?
seller be liable for, because on here it says 12.3%, can they be liable for more than that?
I don't understand what you mean. What are they liable for? That's what they're telling you to change the withholding amount, right? So Simon, scroll down to side 3. So if I'm an individual, it's going to be 12.3% off my gain, right? So that's what I'm going to figure out what my gain is. If I'm making $100,000 or I'm only going to make $50,000 on the sale, you're withholding 12.3% of that $50,000. So that's what you are being told to withhold because they elected to do that alternative method. So I don't understand what they would be liable for. You're doing as you were told and you withheld and they sent it. You sent it and you submitted that withholding. They go and file their taxes the following year. They report this income of the sale and they report that withholding amount.
I guess my question is, can the sellers be responsible for more than 12.3% on their taxes?
I mean, potentially if they're making a lot of income, they could potentially owe us more money because it wasn't enough to cover their other incomes, right?
Yeah.
It just depends. We don't know how much they're making elsewhere. We don't know if they're selling other properties outside of this escrow with you. So it just depends on the person. They potentially could owe taxes, but it's just in a bigger scope dealing with their other income, California source income that they may be reporting on their taxes.
Okay, all right, well, thank you so much, we really appreciate it.